Good morning. I'd like to thank everybody for joining me this morning while we're going to spend the next hour talking about borrower master templates, going through how to create a borrower master template and taking a look at how they can really help improve your overall origination business. I'd like to take just a minute to introduce myself. My name is Stephen Lang. I'm a professional services banking consultant here at Calyx Software. I've been in the industry for over 13 years and have spent most of that time originating with Calyx Software. Just a little bit of housekeeping before we get this webinar started today. Everybody has been muted for today's webinar. A suggestion is to have Calyx Point open on your computer so that you can follow along with the webinar. Feel free to ask questions via the questions box located in your GoToWebinar control panel. The PowerPoint presentation will be available for printing, actually is already, also from your GoToMeeting or your GoToWebinar control panel in the attachments section. Furthermore, a recording of this webinar will be available on our website. I hope to have that up just as quickly as possible. Just a quick legal disclaimer. Information presented is confidential and proprietary to Calyx Software and may not be disclosed without the permission of Calyx. The purpose of this PowerPoint presentation is to provide information rather than advice or opinion. It is accurate to the best of my knowledge as of the date of this presentation. To the extent that this presentation contains any examples, please note that they are for illustrative purposes only, and any similarity to actual events, entities, places, or situations is unintentional and purely coincidental. In addition, any examples are not intended to serve as legal advice. No part of this presentation may be modified, printed, or presented without the permission of Calyx. All right, now that we've got that out of the way, just a quick overview of our format today. We're going to really get through this PowerPoint and take a look at a few of these slides, go over the kind of the do's and do not do's of creating templates, and some of the highlights and tips and tricks that will help get you through these. We're going to jump into a point file after that, take a look at the borrower master template, take a real quick look at loan program templates, and then maybe take a quick look at closing cost scenarios. I actually do have the closing cost scenario webinar this afternoon. I believe that's from 1 to 2 or possibly 2 to 3 Central Time. So tune in for that if you'd like some more information on closing cost scenarios. Then we'll also provide you with some resources as you move forward, helpful tips, question and answers, KB articles, and further training available to you. Today's webinar will show you how to create and use borrower master templates for conventional FHA, VA, and other loans. I'm going to show you how to develop the loan checklists for efficient tracking of third-party and borrower documents. Today's webinar will also show you how to customize and use status tracking in a way that complements your organizational file flow. We'll take a look at how to import a template into an unpopulated loan file. We'll also take a look at how to create loan program and closing cost scenarios. Again, just a brief overview there, as we will have further webinars on both of those. We're going to take a look at how to utilize some time-saving shortcuts to copy these templates. We'll also learn how to incorporate these templates as part of your pipeline management and overall compliance strategy. So the first thing we want to take a look at is locating and starting your borrower master template. From your navigation panel on the left-hand side of your screen, you would want to select the Templates tab. Once you're in that Templates tab, you would select the Borrower Master radio button. Then you can select New to create a template. Let's take a look at using templates to structure your loans. I like to look at templates as the building blocks of your loan. Templates are designed to successively add information to your loan based on the borrower's scenario. And as you're building your loan file, you'll start with the broadest, most comprehensive template add more detailed templates as you progress through the building of the 1003. And what we're going to be taking a look at today, the Borrower Master Template, that is the most comprehensive and the most detailed of the templates. The loan program and closing cost templates are applied sequentially as you receive more information from the borrower, sufficient to make those determinations. Just a few ideas for your first Borrower Master Template. We all know a loan application starts with a conversation between you and your borrower and the gathering of some basic information, whether that's done through an online application or over the telephone. As an originator, you should determine, based on a relatively cursory review of income and assets, whether your borrower will fall into a particular scenario. For instance, FHA or conventional, possibly VA. Many times with VA loans or home equity loans, streamlined refinances, the borrower already knows exactly what type of loan they want. So it's easy to apply the correct template based on this conversation with your borrower. The good news is that if you take a basic application, pull credit, and determine that, for instance, your borrower may be suited with an FHA loan rather than a conventional, you can very easily apply the new FHA template without having to start a new loan or risk losing information in your 1003. So keep this in mind when designing your templates. Remember that they each build on each other. So when building your Borrower Master template, keep it on track. Don't add closing cost or loan program information because this will conflict with the information you add in other templates and cause errors when starting files. Again, we want to make sure that you're building your loan program and closing cost templates separately and then stacking them on top of your Borrower Master template. Just a few quick suggestions for Borrower Master templates. Again, keeping your Borrower Master template simple, not having too many is likely a good idea. Conventional purchase, conventional refinance. FHA purchase, FHA refinance. Maybe a USDA, VA purchase, VA IRRRL if that's something that you have in your portfolio. So let's take a quick look at creating the master template. Obviously, the tabs that you see on the top of your screen here, whether we've got the forms, the verifs, or the tracking tabs, are going to be used when we're building our master template. We'd like to start with the borrower information screen located in the forms menu. This is the first screen that you see when you open a loan file. It's also the first screen that you're going to see when you start your Borrower Master template. From that point, you would continue by working through all of the commonly used screens like the truth in lending, the good faith estimate, and the written list of service providers. Keep in mind, I know a lot of folks on the call may ask, why are we still utilizing the truth in lending screen or the good faith estimate screen? And these are forms that are still used by some of our users, not all. So we do still support the forms, and our loan estimate still pulls certain information from these forms. So keep that in mind. You'll hear me mention these screens as we work through today's webinar, and just wanted to let you know that that's the reason for that. Remember to save the fees worksheet for your closing cost template. Remember to save the truth in lending ARM options for your loan program template. Again, want to make sure that we're keeping our closing cost templates and our loan program templates separate from our Borrower Master template. A few of the benefits of using templates, certainly they reduce input errors, increase your compliance capabilities, and increase your ability to manage your pipeline. Custom business rules can ensure that your users are applying these templates and applying them correctly. Certainly templates will streamline your data entry, no doubt about that. When we're talking about verification requests, third-party document requests, state and federal disclosures, again, forms that we have in the software that if you can add those to the template like we're going to do today, will certainly save you some time with your data input. A few helpful tips. You'll hear me mention this a couple times throughout today's webinar, and that would be create your first borrower master template as completely as possible. As you'll see, we'll work through a conventional borrower master template today, and then we'll likely want to copy that out to the conventional refinance, and then we'll copy that out to a FHA purchase. So again, the idea here is to create your first borrower master template as completely and thoroughly as possible, because you're only going to be making minor changes to the copied templates for the FHA or the conventional refinance. One thing that we want to keep in mind is to refrain from populating declarations that should be received directly from the applicant, regardless of how often they may seem to be the same. Again, we're talking about declarations on page 4, VA and FHA addendums, where we may be asking the borrowers specific questions. So again, let's make sure that we do not auto-populate any declarations. Utilize the escrow and title tables. We want to use these options to create tables for our standard escrow and title fees. No, that's likely been a little bit more complicated post-TRID with some of the title requirements, but we do still have those options available for you, and we do not necessarily want to include those on a template. Okay, so we do have the escrow and title tables available in our utilities menu, and we'll certainly be taking a look at that in this afternoon's closing cost scenario webinar. Utilize your tax tables. Again, this allows you to create drop-down lists for city and state taxes, closing cost scenarios, and loan program templates. Again, can't stress enough the fact that we want to keep all this information separate, whether it's a closing cost or a loan program. We don't want to include that data in our borrower master template. We do want to use them to avoid repeat data entry for regular loan costs and loan program information. And again, we'll take a look at that in this afternoon's webinar. If help is what you need after this conversation, then we do have some helpful knowledge-based articles that can be found at www.calixsoftware.com. Defaulting information into point files using a master template, 0492 entering company defaults, 410 creating closing cost scenarios, and 493 entering drop-down lists for taxes, insurance, tax transfer taxes, and tax stamps. A few resources to take note of. Hitting F1 from any screen in point will populate the help menu with topics that are specific to the page that you're working on. The point user guide that is embedded in your software also can be found from the help menu. Of course, we have our website, www.calixsoftware.com. Our customer support, they're great, can be reached at 1-800-342-2599, as can account managers and sales. As always, if you don't find quite what you're looking for in today's webinar, just a quick note, we do try and keep this pretty basic for new and new users, and maybe as a refresher for existing users. If you feel like you need some more advanced training, feel free to give us a call here in professional services, or speak with your account manager about setting up some additional training for your group. So that's it for the webinar. I think what I'd like to do now is go ahead and move on to our Calix Point software, and we're going to go ahead and dive right into the borrower master templates. The first thing we'd like to take a look at is how to create, open, and copy borrower master templates. So as you can see on the screen, we do have our templates tab in the lower left-hand corner of our navigation panel. From that templates tab, we want to select our borrower master template. And you can see that I have several that are already created here for conventional FHA and VA loans. If we wanted to create a new template, we would simply click on the button that says New. In this case today, we're going to walk through the conventional purchase template that I already have set up for starters, and then we're going to see how this may apply in an actual loan. So to edit or to make changes to your template, simply click the conventional purchase, then click Open. So we're going to do that and take a look at our conventional purchase borrower master template. So as we were talking about in the webinar, in the slideshow, we do have the borrower information page that is going to come up on your initial screen, just as it does for any loan application. The changes that we're going to make to this borrower information screen are going to be relatively minor. You can see that this comes up already as a conventional primary first mortgage, indicated here as a purchase. And so that's exactly what we want for this particular template. The only other area on my borrower information screen that I am going to change would likely be my mortgage insurance. Again, we have to keep in mind that this template that we're working on is a conventional purchase. So as we may want some of this information to populate in our template, we would add it to our mortgage insurance dialog box. We may want to say that we're going to base this on the loan amount. We may want to cancel at 78%, and we would likely want to calculate that based on the remaining balance. I'm typically going to refrain from putting a rate in because that's one of those pieces of information that's going to be specific to your borrower, and likely you'll obtain that at the time of application, possibly shortly after as you're running your MI quote. I can go ahead and plug in a month there as 120, my PMI renewal at 0.2 for 240 months, and I think we're safe putting that information in. You can see here that I have a minimum FICO also on my credit scores of 640. Again, this is something that can be included on your borrower master template or possibly on your loan program. Either way, it's not going to hurt to include this on your borrower master template. Let's take a look at our forms drop-down menu found at the very top. And as we were talking about in the PowerPoint presentation, we're going to work our way down this menu really from top to bottom. And the first area that we're going to take a look at would be our loan application, page 1. Most of the information in the loan application in page 1 is no different, is going to be specific to the borrower. You can see that our loan type, our lien position, and our amortization type, we want to make sure to include those. Our subject property, legal description, I've put C preliminary title in there. Now, if you're a broker and you work with an investor, they may have specifications as to what they will or will not allow in the subject property legal description. So that may be something that you want to leave blank, and as you're originating the loan, visit with your title company or go to your county's website and get that legal description input. You can see that really there's no other fields here that we're going to populate, really with the exception of the possibility of title. We may want to say to be determined in escrow. Otherwise, we may just want to leave that blank. Taking a look at page 2 and 3, we know that our employment and income is going to be borrower specific, as will our assets and liabilities. So really nothing there that we want to default on a template. Page 4, again, the details of our transaction. Those are going to be specific to the borrower, to the transaction, and our declarations, as I mentioned, we want to make sure that we're leaving those blank, as those are certainly borrower specific, as is the government monitoring information. You can see that we do have our company name at the bottom, so we want to make sure that that's there, and that's okay to have that populating. Let's go back to our forms menu, and the next form on our list is going to be our truth in lending. This truth in lending screen, again, this is not necessarily a disclosure that we're going to issue if we're doing a TRID loan rather than a GFE loan. However, we do pull certain information from this form for our loan estimate, specifically our declarations on the bottom. Now, all of our important dates on the top are going to remain blank, as again, these are specific to the borrower or specific to the transaction. As is any of the adjustable rate information, again, we would not want to include that on our borrower master template, rather on our loan program template. You can see that we do have our mortgage insurance information pulling over. And finally, we get to our declarations on the bottom of the Truth in Lending screen. You can see that we've got our property insurance requirements, security, again, goods or property being purchased, since this is a purchase. Late charge of 15 days, 5% of the payment. Will not have a prepayment penalty and will not be entitled to refund of the finance charge. No optional payment here and no assumption. In this case, we do have our Truth in Lending screen marked with an escrow account. Now, I tend to look at this as kind of a 50-50 scenario. If more often than not your borrowers are establishing escrow accounts, probably a good idea to go ahead and have that marked. We have our servicing, yes, intend to transfer servicing. No, state law does not protect on liabilities. Again, that's something you're going to want to check with your compliance manager or your specific state laws about. And then our estimate checkbox is on the very bottom. You can see that as we look at our forms menu here, we do have our fees worksheet. Again, we really don't want anything populated in our fees worksheet at all when we're talking about a borrower master template, as that would come into your closing cost scenarios. We will take a quick look at the loan estimate. Now, most of the information from the fees worksheet will populate the loan estimate, so you can see that this form has a lot of fields that are not necessarily fillable. We do have a few, though. The application date, date issued, again, transaction specific. One thing that you might want to populate here would be your lock and cost expiration, if you have a set time for that. And of course, your time zone can be populated. As we scroll to the bottom, you'll see that we do have a few more fields that are fillable. One would be your standard form versus your alternative form. Okay, in this case, this is a purchase transaction, so we're going to default this to the standard form. And then the ability to populate this with a signature line on the bottom, confirming receipt. So we're going to auto-populate that, yes. Going back to our forms menu, the next form that we have here is our written list of service providers, and we've had quite a few questions on this written list of service providers from our customers, and probably can't hurt for us to take a quick look at this as well. Again, this is certainly one of those forms that if you're using a set group of providers for title and for services the borrower can shop for, it's a good idea to have these included on a borrower master template. And in most cases, they're likely not going to change depending on the loan type, whether it's a conventional or an FHA. So it's certainly easy to copy this from one template to another. As we're looking at this written list of service providers, we can see that we have several providers here on the top, whether it's for title companies or credit companies, appraisers. We do have termite inspection here, flood inspection. So adding those to the bottom is what actually determines whether this is a service that the borrower can or cannot shop for. On this particular template, I've only added services that the borrower can shop for. I have not added credit, tax, flood, appraisal, anything of that nature. So you can see we've got escrow services, pest inspection, home inspection, title insurance, and survey added to the list. And again, those will populate on the disclosure every time as you see them here. Back to our forms menu, our closing cost worksheet, again, not an area that we're going to focus on, as this is tied directly to our fees worksheet and our closing cost scenarios. our closing disclosure. Again, we do have one area on page 5 that we would likely want to check yes and say confirm receipt. Back to our forms menu, and you can see that we have our old service providers list. We're going to leave that alone for the time being and not include anything on a borrower master template having to do with the old service providers list. And the same with our transmittal summary R1008. We do have a ARM disclosure that if we were copying out a specific borrower master template for an ARM loan, there are several areas on there we might want to take a look at, and that would be your the index that this is based on. So we may say Wall Street Journal, and information about the index is available at wallstreetjournal.com. Our credit score disclosure, that's going to be auto-populated when we import our credit report. So again, as far as the template is concerned, nothing to autofill there or default there. We do have several other disclosures here: a flood hazard determination, flood hazard notice, homeownership counseling. Again, these are not forms that we really have fields that we can default on. Loan submission sheet, origination agreement. Again, these are going to be more loan specific, so including those in a template may not behoove you. I think when we get down to our Patriot Act disclosure, we can really start looking at a few of these fields that we can add. Maybe auto-populating our driver's license as a document type, a passport as a secondary document type if necessary. I believe for the most part I would just include my driver's license as my primary document, and then leave the second identification type blank, as that can be populated as you're working through the loan itself. We've got our request for appraisal, insurance, survey, title. Again, we can set these up with an attention from. Okay, so if you have a certain individual in your organization, possibly a processor or a coordinator that's always requesting these documents, you can add that name and title. Lender information, property information we can add. As far as our appraisal information, if we're working on a conventional purchase, we may want to say interior, exterior, as is, and then our Fannie Freddie 100470 form. If you have a general email address for appraisals, you may want to add that below, as well as contact information for entry. Since this is a purchase, we're going to say see attached contract, and then if our payment method is always the same, or if we have comments to add, we can add those certainly to our template. So I'm seeing a few questions come in now. First question I have here is, would the credit report and appraisal be put in the cannot shop for? And this is going back to our written list of service providers. That's up to you, Rose. As far as CFPB is concerned, the guidelines on what you have to disclose in terms of your written list of providers, I don't believe has changed. Certainly check with your compliance manager on that. If you wanted to include those, you certainly could. They have now included the second page as services that the borrower cannot shop for. And again, those can be included. I've simply chosen only to include the services that the borrower can shop for in my default template here. Okay, so getting back to our forms menu, we'll continue to work our way down. Take a look at our request for evidence of insurance. Again, we do have our requester here, Anna, and she's the setup coordinator. Again, if that's the same every time, you'll want to put that in. If that's going to change from time to time depending on who's ordering it, likely leave those fields blank. You can see that our legal description has auto-populated from page 1 of our application. We've got our lender information and our mortgagee clause again. So good information to put on your homeowner's insurance request. Again, if this is information that you know of at the time. If you're a broker and working with an unknown lender at the time, again, this may not be information that you include. And then this may not even be a form as a broker that you're using if this is a request that's coming from your lender. Okay. Let's see. Here's a question from Juliana. For email appraisal 2, can we input more than one email address? Well, Juliana, I'll go ahead and get back to that. And the idea here would be, let's go ahead and put that in the notes. Okay, so let's get back to our request for appraisal. And I think the question is, can we put in more than one email address? Again, I would add that to my comments for the appraiser to see. So good question. Thank you, Juliana. Back to our forms menu. Evidence of insurance. Again, very much the same way. Going to have our mortgagee clause. Let's go, and I think we've already looked at that, so let's take a look at our request for survey. Again, if we know any of the information that we want to have defaulted here, whether it's survey, contract, depending on what your title company provides for you, we can certainly add that to our request for survey. Let's scroll down and continue to look at our forms. 4506T, again, this is one of these forms that you'll have to make a note. And typically what I do when I'm working with clients one-on-one is we'll set this up, and then we'll immediately set up a calendar reminder in Outlook to say, as of April of 2016, we need to make sure to update our request period dates. But again, on this particular form, the borrower information will auto-populate from page 1 of your application. As far as sending return transcripts to, I think in most cases those are sent to a third party, so just make sure you have the correct information in there. Everybody knows that these forms they're very particular about the information on these. So if you're always or the majority of the time getting the form 1040 and you need to return transcripts, certainly populate that information. W-2, 1099 information can be auto-populated there as well. And then our requesting dates. Here we have 2013, 2014. We know that very soon we would want to be updating that to 2014, 2015. So again, this is one of these forms that you may or may not want to default in your template. If this is a form that you feel more comfortable with working through individually for each loan, then certainly feel free to do that. Kind of have to feel that one out on your own. Back to our forms menu as we keep working our way down. You can see that we've got our request for title. Again, going to be very much like our request for homeowners insurance, where we might want to populate our mortgagee clause. Certainly you do have your requestor and the title there. On the bottom, we do have special instructions that will allow you to specify what you're requesting in terms of title, whether it's fees, maybe an initial CD, initial LE, title commitment, 12-month chain of title, insured closing protection letter, wiring instructions, and so forth. Back to our forms menu, we'll continue just to work through these requests. Again, Social Security number verification, if that's something that you're requesting, can be populated as well. And then you'll see that we have on the very bottom FHA disclosures and VA disclosures. Certainly, if we were creating a FHA template, we would want to include those. And we'll take a look at a few of those as we copy out our conventional to an FHA. This is just one of the few areas that we would want to make changes to as we copy a conventional to an FHA. So we've worked through our forms menu and gotten through most of our disclosures and requests. I like to take a quick look at the verifications menu, whether it's verification of deposit, verification of employment. Again, just some basic information we can populate on these, the requester and title. But the most of this is going to be pulled in. In this case, we're looking at verification of deposit. It's going to be pulled in through your assets on page 3 of your application. So not a lot to default here with the exception of the requester. And the same goes for verification of employment. Most of this is going to be pulled in from your application itself. So not a lot to default here other than your requester, but certainly good information if it's not going to change to have that defaulting, so it will always be there for you. The next drop down that I like to take a look at is my tracking menu, and typically like to start with my track. Let's take a look at the track registration and rate lock real quickly. We do have the business channel here that I like to populate based on the particular loan type. For instance, if I'm a mortgage bank and all of my conventionals are considered retail, but maybe I have to broker my FHAs. Okay, so I may want to include that information here on the track registration and rate lock screen. Not a lot else there that I want to populate as this is used for rate locks and so forth. So that's going to be specific to the loan itself. Continuing to look at our track menu, like to double check my track agent list and just make sure that my bank information is on there. And then I'm really moving on to my track status. Track status, if you're not familiar with that screen, has several important areas. 3 specific areas would be your loan progress, and we'll take a look at that first. Just to kind of clarify, as we have our important dates here on the top, we certainly don't want to input in any information there, as it will auto-populate then on a loan file when we're to open it up. Our loan progress. Again, these are going to default in your software, your prospect, application sent to processing. What I've added to mine are the comments. I do this by double clicking on the line there, and you can see that I've got my loan progress dialog box here that says prospect. Again, I've added a comment that just defines this as an origination lead. Okay, this is not an active loan yet. I've done this so that whether it's myself or my processor or my underwriter that's updating a status, everybody knows exactly what this status means in our organization, because each organization is a little different. For my application, you can see that I've added a comment that indicates 6 pieces received, time to disclose. Okay, I think where most groups of people start running into some differences of opinion is, when does this get sent to processing? Okay, so adding a comment there may help clarify that for you and your users. In this particular case, we say setup's complete, submit to processing, meaning this particular loan officer has handled all of the order outs, and at that point they submit it to processing. Submitted here means submitted to underwriting. That may be different in your organization, so it can't hurt to add a comment that clarifies that. You also have the ability on loan progress to add additional statuses. Okay, the same way here I've added the intent to proceed, and I have this comment added as received from borrower. So I can status the time, the date that I received my intent to proceed. To add any custom statuses, simply double click on the available line, add your status, and add your comment. I find that these custom statuses are helpful for tracking purposes. If you're using custom forms or reports, you can certainly tie these dates in and draw information based on these dates. Business rules can be written if you're on Point Central that will tie into these dates as well. So very handy to have these available to you, and certainly having them in a borrower master template ensures that they're there for every file that you open. Let's scroll down and take a look at the third-party documents. Okay, this is a checklist that will populate on your screen when you open up a new loan file and show all of the outstanding third-party documents. You can see that we have several here that are required. Our credit report, we did not mark required next to our business credit report, as that's fairly uncommon for most residential loans. Preliminary title, initial disclosures, appraisal report, our flood cert, social security number verification. Now you can see that we've got some that may not be on your screen, and these are forms that I have gone through and added. Again, I've double-clicked on the line and added my social security number verification if that's a form that I require. I've added my IRS tax transcripts. That's a third-party document. That's a form that we may require. So I'm going to add that to my third-party document checklist. You can also see that we do have the ability to calculate a due date based on a number of days from application, prospect, estimated closing. Okay, so if we want to say after this becomes an application, we want to give ourselves, let's say 8 days to obtain our IRS tax transcripts, we would plug that in. Verification of employment. Again, we have the ability to calculate a due date there based on our application date plus 8 days. We'll keep it the same as our IRS tax transcripts. Verification of deposit, again, something I've added, and we've got that calculate due date based on sent to processing plus 3 days. Okay, survey, homeowners insurance. All of these are third-party documents that I want to show up every time I open a loan on my checklist, and we'll take a look at that as we open a new loan and apply a template. Same thing with our borrower documents, pay stubs, W-2s, tax returns. Much the same with our third-party documents, only these are specific to the borrower. Okay, here in our left-hand required column, you can see that I have REO documents required for this particular template. If this is a conventional purchase, we may not want to include REOs as they may not apply to every borrower. Okay, so what we really want to include is what's going to apply to every borrower on a conventional purchase. Okay, again, we have the ability to open these up and edit them. We can add due dates. We can calculate the due dates. Again, the same criteria. Maybe 2 days from application, we want to make sure that we've got our pay stubs. Okay, so really what we've done at this point is work through a complete borrower master template. Again, from our forms menu, we've worked from top to bottom, and again, really gone through and completed some of the insurance, title, appraisal request forms, gone through and kind of tidied up some of our disclosures, so we know that our disclosure print groups will be going out correctly. We've gone through a few of our verifications and added what little bit of information we feel like we can on those. And then again, on our track screen, we've gone through our registration and rate lock. We've gone through our track status page and just making sure that we have as much information as possible included on our third-party and borrower document requests. And again, I would encourage everyone on a template to add as many borrower documents as you possibly can. It may take you a minute or two to do that, but just remember that as this is a template, you'll only have to do that once. So adding more here without requiring them will allow your users to check those off later on down the road. If I wanted to add a borrower category here, let's just go ahead and say we want all borrower documents, and let's just say divorce decree. That may not be something that we add as a required document. Certainly it's something you're going to run across from time to time. We want to make sure that it's there, but we're not going to mark it as required, so it won't show up on our checklist. It will still show up on your track status screen under your borrower documents. It just won't show up on your checklist, and we'll take a look at that here shortly. I'm going to save this conventional purchase, and I think what I'd like to do is we'll exit this, and I think the next thing we want to take a look at is how to copy this to, let's just say, a conventional refinance. So I'm going to select my conventional purchase, and I'm going to use my copy function here on the upper right hand side of my screen. You can see it's going to allow us to name it, so we're going to take the copy out, and we're going to call this conventional refinance. We're going to click OK, and it's going to add that to our list of templates. You can see that now we've got our conventional refinance there. So we're going to open that up, and we're going to make some changes to this, because what we have now is a carbon copy of our conventional purchase template. So on our first page, we really want to change this from a purchase. Let's just say no cash out refinance, still a conventional loan, primary, first mortgage. Since this is a refinance, we're going to make some changes to our mortgage insurance. We may, on a refinance, want to remove most of this information, as I like to do when I'm building a template like this. That way, we know that that's information that is likely going to change quite a bit, may not even be applicable on a conventional refinance. In some states, you may even have to be at 20% equity and not even have to have MI for a conventional refinance. So just a few of the changes that we're going to make there on our borrower information screen. Moving through this, we may want to take a look at our truth in lending disclosure. We know that there's going to be a few changes there to be made to our declarations. Certainly, we're going to no longer use the goods or property being purchased and change that to real property you already own. Few other changes as we work through a conventional refinance. Let's go to our loan estimate. As we worked through this before, we remembered that we were using the standard form because it was a purchase. Here we're going to go ahead and change this to our alternative form for our conventional refinance. As we look through the rest of our forms, there's really not a lot else that we're going to need to change for our conventional refinance. Again, most of our requests for appraisal, requests for insurance, and things of that nature are going to be the same as its mortgagee clause and things of that nature are not going to change. We do want to make sure that we going into our track status screen, possibly making some changes to our document requests. Again, we may want to add to our document request here for third-party documents a payoff statement if there's a current mortgage. And certainly we're going to make that required. We may also want to go to our borrower documents down here, and let's take a look. We've got earnest money deposit. We know we're not going to have that on a refinance or executed purchase contract, so we may want to change that to miscellaneous docs, for instance, and change this to miscellaneous other just for now. And let's go ahead and say current mortgage statement, subject property. Our earnest money deposit, certainly we're not going to need that anymore. So we may just want to delete that one. Okay, so as you can see, again, the importance of creating a thorough borrower master template. So then you have the ability to create your conventional refinance or, again, an FHA purchase. Some small changes that would have to be made, but certainly nothing significant. So we're going to save our conventional refinance. And I'm going to close out of this. We're going to take a real quick look at our loan programs. I'm going to open up our conventional 30-year, since that's kind of the track we were moving on earlier. And you can see that these loan program templates are very very simple. You can see we've got one page, just some very basic information regarding the loan itself, loan program name. This is what you're going to see when you choose a loan program in your borrower information screen. Max LT and CLTV allowed for this particular loan. Our max loan amount for this particular loan. Conventional, first, fixed rate, our term and due. See, we've got our minimum FICO scores below. And again, these can be included on your borrower master template or on your loan program template. If we did have rounding options or ARM adjustments, we would include those on our loan program template, as we would any payment adjustments or buy downs. So again, going to have you could have a multitude of loan programs. Just kind of depends on what you have available in your portfolio or the type of investors or lenders that you're working with. So we'll close out of this, and I think I'm going to see if we have any questions. Doesn't look like we have any questions just yet. What I want to do is go to my loans tab, and I just want to show you how this is going to apply as we create a new loan, or if we need to import a template to an existing loan. So as I am in my main screen here in my navigation panel, as most of you would, simply click New, and you can see that all of our borrower master templates are here below. Let's go ahead and select the conventional purchase that we just worked through. Click OK, and we're going to let that open up. And now you can see that we've got our checklist here with our third-party documents, our credit report. Again, if you're importing the credit report, that should automatically shown as requested and received. You can see that we've got our preliminary title, initial disclosures again. As you're working through this, you can check those off. You can see that below that we have our borrower documents. Certainly, I think if you're using Webcaster, you can use this to request documents from your borrower. Simply select the number or the documents you wish to request and select Send Retrieve. This is going to prompt you for your, well, if you have a complete file, you'll have your email address in there, but this is going to prompt you to send these document requests to your borrower. So again, the idea here, having those in your template, that way it's as simple as selecting them and then sending the request to your borrower. I'm going to close out of this particular loan. I'm not going to save any changes to this. Let's open up a loan that we already have here. And assuming we have let's see what we have here. We have this as an FHA loan. We may decide as we're working through this that we want to switch this to a conventional loan. And we've got our 5% down payment. To import the new template, say from an FHA to a conventional, we would simply choose our File, Menu, Import From, and then select Borrower Master File. This is going to bring up a list of all of your borrower master templates. In this case, we have this as a, we have this as a primary purchase. So let's go ahead and do our conventional purchase, borrower master template. Click Open, and it's going to import the data. You can see that it's populated our borrower documents and our third-party documents now on our loan checklist. So we've got that updated. Okay, so just a few tips. We've looked at how to import the existing file. I think one thing I'd like to say is obviously you'd like to complement any of your borrower master templates by working through your company defaults. Company defaults are located in your utilities menu. Along with your drop-down list, you have your company information. We worked through some of the disclosure information in our borrower master template, but a lot of it, when we're talking about ECOA, fair lending, denial letters, servicing disclosure statements, information for those is included here in your company defaults sub-menu in your utilities drop-down. Okay, so your privacy policy, disclosure, right to receive appraisal, these are again going to be defaulted here, and I think it's good to work through those along with your borrower master templates. I would also say build some custom business rules in your Point Central admin site that will allow your users to use these templates on a regular basis. In other words, you're going to require your users to use these when they open up a file. Let's get back to our templates tab here. And since we've got a few minutes left, we'll take a look at closing cost scenarios. And again, we're going to touch on this afternoon in the closing cost scenario webinar. But certainly, your closing cost scenario looks simply like a fees worksheet. And we'll open that up without saving any changes here. Looks like a fees worksheet with no information on it. This is what allows you to come in and select yourself as the lender or select yourself as the broker. Allows you to populate any origination charges, any credits, any lender paid compensation, title fees, certainly services the borrower cannot shop for, appraisal, credit, tax, flood, things of that nature, as you would see these on the loan estimate. Again, certainly there's some information here that you're not going to want to populate even in your fees worksheet or in your closing cost scenario template. Again, my suggestion is to use your closing and escrow fee box to do that. The lender's title insurance and the owner's title insurance boxes can be used to populate those as well. Recording charges, escrow deposits, and again, one thing we'll touch on this afternoon is how we've decoupled some of this information from our borrower information screen. So I think now more than ever, using templates for closing cost scenarios is important, just so we can ensure that this information is reviewed and looked at prior to issuing your LE. So I guess I'd like to open it up for questions if anybody has any. We've got about 3 or 4 minutes left here. Feel free to jump in with questions, and I'll certainly answer any questions that you have at this time. Okay, here's a great question. Once we set up templates, if we update the templates, will that change the information on all the existing files? No, it won't. That you would have to go back and retroactively apply that template. Again, doing it the same way. Once you're in a loan, let's go to our loans tab and just open up one of these. That information from the updated template would have to be applied retroactively by selecting File, Import From, Borrower Master File. Okay, so it's not going to go back and update if you make a change to your Borrower Master template to your 4506T, for instance. It's not going to go back in and update that for a change in the years for files from 3 years ago. So you can understand why you wouldn't necessarily want that to happen. Again, if you're updating information, there's usually a reason for it, and there's a reason why that would be applied from this point going forward and not retroactively applied. But thank you for the question. Are there any other questions that we have today? Okay, well, I'd like to invite everybody certainly to join me this afternoon as we work through the closing cost scenario templates. Certainly we'll take a look at those in great detail. I'd like to thank everybody for joining us today. And again, if you have any questions, feel free to reach out to support. Feel free to use your help menu. And if you have any questions for